Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Thursday, September 19th, 2013. Well, a continuation of the trend to the upside today. The prior candle had made a higher high and a higher low, changing the trend to the upside, a very bullish white body candle. Today's candle has a lower high but a higher low, and in bar chart terms is an inside day. Therefore, an inside day doesn't change the trend, so technically the trend of this market in that first time frame is up. Having said that, however, there has been a change of sentiment in this market. And if we look at the size of the white body and the colour of the body for the previous day's trading, the buyers had taken control. They'd made some very strong upside momentum in net terms on the day between the open and the close. And today all of that has evaporated with us having a black body candle. The black body suggests that momentum in that net terms has swung back to the sellers. Certainly not in the magnitude of that the buyers had for the previous day, but certainly does raise doubt about continuation of the trend to the upside and suggests that there is a possibility of a change of trend. So the sellers have made quite a substantial amount of net bearish progress on the day between the open and the close. If we look at where the market is open and the close, we've closed at the high and opened at the high and closed down at the low, and that suggests that the sellers have taken back control of the market for the trading day, whereas the buyers had it for the previous day's trading. And throughout today's trading day, the sellers have been in control of this market for the entire trading day, suggesting that there is a possibility of the trend changing. Now, in terms of bar charts, this is a short-term reversal signal. It's a hook reversal, and here we have the prior uptrend. We have the market opening at the high and closing at the low or thereabouts on a day that's an inside day, and it is a hook reversal. We do require confirmation, and that would be a candle or a bar with a lower high and lower low. It's also a potential Japanese candlestick reversal pattern, and that's a harami pattern, and that's where we have an uptrend, we have a white body, we have a black body now with the body of the current candle within the body of the previous candle. So we are looking for confirmation, so a lower high and lower low will confirm that change of trend. If the market does change trend, we may see very strong support coming in around the 93.86 level. That was a previous swing high that the market was rejected from, and then we bounced back up through there, so there is potential for that to hold as support. We also have the Tenkan trading roughly in that area around the 93.74 level, so it is going to be a very, very important level for this market. If the trend does continue to the upside, however, and there is a possibility of that, just because we have the short-term dynamics favouring the sellers, it doesn't mean that there will be a change of trend. It's just that the probability is that there will be, and we require confirmation. But if the trend is going to continue to the upside, the buyers really will need to find some strength in this market, and the 95.36 level may be a very, very strong level of resistance for this market. We also have strong resistance up at the 95.81 level, and then beyond there the 96.62 level. In terms of the Fibonacci extension, really not telling us a lot here at the moment. Our target was the 161.8% level at 95.56. We're now seeing bearishness coming in with a potential change of trend. If the trend does continue to the upside, however, that is an area that we do want to watch at the 161.8% at 95.56, but we could see the change of trend before that happens. And with the Fibonacci retracement, we're in an expansive mode of that. The 261.8% level is just above where the market is trading at the moment at 95.64. The market hasn't interacted with that yet, so not really giving us any clues. As I've mentioned, if we don't see that change of trend to the downside and the trend continues up, that area is a very strong area coinciding with the other Fibonacci technique. In terms of Ichimoku, we have a bullish market in all three time frames here. The market's trading above the cloud, so we have a bullish market in the long-term time frame with that bullish bias. We also have a bullish market in the medium-term time frame by trading above the Kijun Sen, and interestingly that Kijun-sen is pointing flat, so there is a real possibility of the market retracing back towards that flat Kijun-sen, and therefore that's confirming the strong possibility of a change of trend to the downside, so let's look for that. But the market's also trading up above the Tenkan-sen, the green line here, so we have a bullish market in the fast term time frame, and the Chico span is above the corresponding price action, so it's confirming the bullishness that we're seeing in all three time frames. And this suggests that if we do see a change of trend here, the likely scenario is that we see the market come off, it finds support either at around the 93.86 level or around the top of the cloud or at the area extending into the window that's been open, and then bounces back off.